I have to ask, this is the elephant in the room. What's going on with the delayed GDP and domestic activity numbers, and how do investors read into this, or do we not read into this?
I think the short answer is we do not read into this that much. I think the expectation is that, with all the lockdowns, GDP numbers is going to look pretty low. And we feel that overall there is a bit of a disconnect between when you look at what's happening at the macro level and what's happening at the micro level. And that's where we think the market is being mispriced. So yes, we will look forward to the numbers to come out, but we don't look at it very much.
What are you looking at, though, when it comes to cautiously constructive on selected opportunities in China? I hope that sort of covers your positioning. But what are you looking at? What's the time frame? What are the sectors and companies that are interesting to you?
Yes, we are looking out. Most important to us as bottom-up stock pickers as well would be the fundamentals of the companies. So it would be the earnings growth that these companies are generating. And, we talk about how the GDP numbers of China is going to decline below 5% this year, but the companies in our portfolio are generating high teens type of growth, and they are on their way to meet the expectation as well. So far, I think selectively, depending on where you play, the earnings growth of the companies are actually quite healthy. One area could be in the green economy side, and this is really because the spending does go on regardless of what's happening to the GDP growth, given that it is a policy target. But also we have seen a strong acceleration of the move towards renewable energy globally post the Ukraine and Russia situation.
Pruksa, is there enough confidence, in your view, on not only the China story, but also the broader Asia story by investors right now?
Yes, that's right. And I think a lot of this is also due to how China and Asia as a whole is a very unloved place at the moment. And I think that's a lot of it is really boiled down to sentiment. But we think that there are pockets of growth, whether you look at, the domestic China A story, whether you look at India. India is growing very strongly, benefiting from economic growth post the reopening of the economy. And I think an underinvestment in India for the last decade. So we are seeing very strong growth story in India. And then moving on to ASEAN, again, it's one that has been unloved for many, many years, but it's actually one that is benefiting from, again, reopening tailwind. Some of the ASEAN financials have done pretty well for us this year as well. So I think given the overall environment, we have to look harder and have to be very discerning with regard to the quality of the companies. But I think there are lots of opportunities for us to pick the right stocks, given that valuation has come down quite a fair bit.
What are you expecting for the current earnings season? Here in the U.S., for example, earnings season provides a little bit of a boost usually for the equity markets. What will earnings season in Asia look like, and what are you focusing on?
I think we are not expecting any negative surprise from the earnings season. I think it's too early to call that we'll see a positive surprise from the current earnings season, given the backdrop that we are in. But I think fair to say that throughout the year, earnings for Asian companies have gone through negative earnings revision, given that they were at a high expectation earlier on in the year. So that has come down. And I think we are at the stabilization phase. What we are increasingly see, which is an interesting observation from some of the companies, is that cost pressure for them has come down. And this is really because they have either repriced their products and have passed on the cost, and then you see the raw material pressure coming down as well. So margins are actually looking better for Asian companies, and that should help with the bottom line.